Hello Maverick traders, this is Imri and welcome to today's currency recap. It is Thursday, July 13th. All right, so we'll be going over some meaningful news of the day. We'll be doing some broader equity market analysis. We'll be taking a look at gold and oil as far as commodities go. And then we're going to be taking a look at some technicals, a little bit of crypto, and then some Forex as well. So let's get right into it. All right, so first things first, stocks continue to grind higher today on not really any real news. I'd say that there's a lot of hope right now that the Fed is completing its tightening cycle. So I think the market's looking forward to seeing whether or not the Fed will deliver a full-fledged pause. This is despite Powell's comments that rates will stay elevated at current levels for quite some time. But I digress. That's a topic for another day. Crypto, big news out of crypto today. Ripple has won its lawsuit against the SEC. That's led to a bullish surge of capital coming off the sidelines and flooding into crypto. Last time I looked at Ripple, it was up over 40%, which is crazy in one day. Gold up slightly on the day, more or less flat, and oil up nearly 2%. Okay, taking a look at the S&P 500. So we've met this 4512 key level that I've been talking about for quite some time. At this stage, I'm extremely cautious. I think we're much closer to a top than we are to a continued melt up. So I'm seeing, these momentum indicators and a lot of risk assets getting crazy stretched out right now, which tells me that, sure, things might go higher for a little bit, but I think it's time to start getting cautious and start protecting any positions or any open risk accordingly. All right, so next up, we're looking at the 10-year yield. You can see here that yields have broken out of this trend line, hit 410, and then we're coming off steadily right now. First key level is at 367, and then after that it's 357. I can see a reasonable pullback in the yield. I'd be a little shocked if we fell out the bottom here at below 3.3%, but we'll have to keep an eye on it. I'm curious to see if we can find support between these moving averages. And in terms of the crypto basket, we're kind of high basing here and then breaking out of that high base. So good news for crypto bulls. I think there will be some selective opportunities to take advantage of in the near term. In terms of a market outlook here, not any change. We're sticking with a +3, all green lights, at least for now. In terms of the weekly calendar, tomorrow at 10 a.m. we have consumer sentiment coming out. If there's a big, miss relative to the forecast, either up or down, it could be a market mover. Otherwise, I don't think it's going to be having too much of an impact on tomorrow's price action. Heading now into currency analysis. So first up, we've got our cryptocurrency baskets. So pretty much everything did well except for Bitcoin Cash, which doesn't really come as a surprise. Over on the fiat side, the dollar and the yen were the two biggest losers, followed by the Canadian dollar. The European currencies were mostly flat, and the Aussie and Kiwi outperformed on the day. In terms of velocity, it's a pretty interesting picture. The Swiss franc is a +2 technically, but it's the Aussie and the Kiwi that I'm more interested in, especially relative to the North American currencies and the yen. All right, let's take a look now at some possible trades. So we're going to head over into TradingView to take a look at what's going on. So first up, we have this yen basket right here. Okay, so I've talked about how we've dipped below this historic low level from 2007, and that's with the relative strength index putting in crazy amounts of bullish divergence relative to going all the way back to 07, July of 07. And we even have bullish divergence between October 2022 and June, July of 2023. So I think the stage is set pretty nicely for a very sharp technical reversal in the yen, but we haven't seen a sustained break one way or the other. Let me just make this channel a little bit more visible here. So I think if we get a break out the top side of this channel, that's when I'll be very excited to go long yen. But yeah, as of now, we're still within a descending trend channel. So that tells me that caution with any long yen positions is warranted. In fact, I'd say caution with the yen period is likely warranted. There might be a little bit lower to go. This could be yet another bear rally in this yen basket. So you'll have to be very selective in terms of how to play the yen. I think against the commodity currencies makes a lot of sense. I particularly like Aussie yen as a potential setup. All right, moving on to the dollar now. So this prophecy has also come to pass. I said we'd get a little bit of a rally in the dollar and then a big sell-off. That's exactly what happened. We're coming into support here. So I think once we meet the February low, that's going to be potential support. We might see a double bottom. Relative strength index on the daily chart is already showing oversold conditions. But ultimately, I do expect the dollar to continue grinding its way lower in this basket, potentially reaching levels it hasn't seen since late 2021, early 2022. Okay, taking a look at the Swiss franc. So we've broken out of this little bull flag and we've almost reached a historic extreme here. This means I'm getting very cautious on the Swiss franc, especially as it's gotten crazy overbought here. So today is not the day, but eventually being short, being short the Swissy is going to pay off in a big way. But today's not the day, and I think we can afford to be a little bit more patient with the Swissy. But I mark my words, that is going to be one crazy unwind, same as with the yen. The euro is just in no man's land, just trading sideways, not interesting in the least. Avoid it. Pound, we're still flirting with this resistance level here. There is precedent for having spiked above it slightly. Back in 2018, we traded above it for a few days. Here in 2019, we had a spike through. Here in March 2020, we had a spike through. Here in 2022, slight spike through. So here we're actually trading above that resistance level for quite a little bit longer than we have in the past. Does that mean it's a real breakout? I think it's too early to tell. One thing that's interesting is that if you look at the relative strength index, this is the only time on the weekly time frame that the RSI has gotten crazy overbought as we've pierced through this resistance level. So whether that means that it's a quote unquote real breakout or not is too early to tell. So I'm no longer interested in being long the pound. I'm waiting patiently for reasons to short it because I think the risk-reward equation is just skewed a little bit more heavily to the downside. Next up, we have the Canadian dollar. I mentioned this head and shoulders, inverse head and shoulders target. Look, pretty much to the tick, we met that and then we reversed sharply. As of now, I'm neutral. I don't really see any setups in the loonie, even though velocity was on the negative side today. I'd be a seller on any kind of bounce though. I think it's more likely that we're going to break lower and retest these lows for March 2023, January 2023, March 2023, and May 2023. Okay, next up is the Aussie. The Aussie's just been very frustrating in my opinion because I thought we were going to break higher, which we did. And then I thought, yeah, all right, let's see if we find support. We didn't, we broke through it, and now we're testing that resistance area again. My bias from a technical perspective is to be long the Australian dollar, but I just don't see the setup in the basket quite yet. Here's a trend line you should keep an eye on. If we crack this trend line to the upside, break through it convincingly, that'll be, in my opinion, a reasonable green light to be looking for long Aussie positions. Finally, the Kiwi dollar, very similar to the Aussie. I think there's this trend line which is less mature than the one in the Aussie. It's only got 2 touches on it instead of like in the Aussie we had 1, 2, 3, 4. Here it's only got 2, but I think taking this out and then breaking above the high from May 22nd would be pretty significant as well. On the downside, if the low from June 5th breaks way down all the way down here, then that's a warning sign for any New Zealand dollar bulls. And that's it. So in conclusion, the dollar is broken and currency volatility is back for now. And as always, focus on proper position sizing. And that's it for me, traders. I will see you next week.